Hi, thank y'all for joining us today for Fires, Floods, and Finances, Protecting Your Home and Wallet. My name is Keisha Nall. I'm the Learning and Development Specialist at Money Management International. I'd like to start off by saying Money Management International is a national full-service nonprofit financial education and counseling organization with a mission to improve lives through financial education. MMI provides a variety of services to help clients manage their finances and achieve their goals. MMI provides education through workshops, online resources, including our free online learning program, learn.mmiuniversity.org. We also provide credit counseling in person, online, and by phone. During a counseling session, an MMI counselor will help assist your financial situation, develop a spending plan, set financial goals, and create an action plan. Through debt management plans, we work with creditors and help clients get completely out of debt as quickly as possible. MMI also provides foreclosure, reverse mortgage, home buying counseling, bankruptcy counseling and education, student loan counseling, credit report reviews, and post-disaster recovery counseling. Visit moneymanagement.org to learn more or to schedule a counseling session today. So today's session is designed to empower you with practical knowledge and skills to protect your home and finances during fires, floods, or other emergencies. We'll start by clarifying what homeowner insurance typically covers and, just as importantly, what it doesn't. You'll receive actionable guidance for responding to disasters, including step-by-step instructions for fires, floods, and financial emergencies, plus tips on filing claims and knowing what to expect throughout the process. We'll also build your confidence in reviewing your insurance policy, focusing on how to read your declarations page and spot any gaps in your coverage. Financial preparedness is key, so we'll discuss how to budget for emergencies, the importance of emergency savings, and how to ensure riders can offer protection. Finally, we'll explore strategies for recovering, including how to rebuild and access support from FEMA and other insurance and assistance programs. By the end of this session, you'll be equipped with the tools and knowledge to safeguard your future and support others in your community. Natural disasters are becoming more and more frequent and costly across the United States. In 2024 alone, the country experienced 27 separate weather and climate disasters, causing over $1 billion in damages. This marks a sharp increase from the previous decades, with the annual average just over $9 billion events from 1980 to 2020. The last 5 years have averaged 23 such disasters per year. The financial impact is staggering. In 2024, these disasters resulted in approximately $182.7 billion in damages, making it the fourth costliest year on record. Over the past 5 years, the total cost has reached nearly $750 billion. And since 1980, cumulative damages have exceeded 2.9 trillion. Flooding alone costs the U.S. between $180 and $500 billion annually, affecting infrastructure, homes, and businesses. Hurricanes remain the most expensive disaster, with Hurricane Katrina in 2005 causing over $200 billion in losses. Beyond property damage, disasters have a profound effect on personal finances. In 2024, 20% of Americans reported being financially impacted by severe weather, with lower income and minority communities facing the greatest hardships. Credit scores can drop nearly 30 points after a disaster, and debt collection rates rise significantly. In summary, the frequency and financial toll natural disasters are rising, underscoring the urgent need for preparedness, resilience infrastructure, and equitable recovering efforts. Before we talk more about insurance and finances, it's important to pause and acknowledge the human impact of disasters. Disasters don't just damage homes, they affect people emotionally. Loss of property, fear of personal safety, displacement, and uncertainty about the future can all create significant emotional stress and trauma. These reactions are normal, and no one should feel ashamed or alone for experiencing them. This is why mental health is important. It's such a critical part of recovery. Resources like crisis hotlines, virtual counseling, and community-based support groups can help individuals process what they're going through and begin to regain a sense of stability. We also know that early support makes a difference. Simple strategies like education about stress reactions, peer support, and connecting with trusted professionals can reduce long-term emotional impact and help build resilience during and after a disaster. As we continue today, remember that financial recovery and emotional recovery go hand in hand, and support is available for both. After a disaster, recovery isn't just about repairing the property. It's about recognizing how the experience may affect people emotionally and financially. First, it's important to identify trauma symptoms early. Trauma can show up in different ways, such as increased anxiety, withdrawal from others, and difficulty concentrating. These reactions are common after a disaster. Recognizing them early can make it easy to seek emotional support and reduce long-term stress. Next, let's talk about thorough insurance documentation. Carefully documenting damages and contacting your insurance provider as soon as possible are critical steps. Clear photos, written notes, and timely communication can help prevent delays and support a smoother claims process. Finally, understanding your insurance policy and keeping organized record plays a major role in recovery. Knowing what your policy covers and having important documents easily accessible can resolve claims more effectively and reduce frustration during an already stressful time. Together, emotional awareness, careful documentation, and organized records create a stronger foundation for recovery after a disaster. Now, when it comes to protecting your home, it's crucial to understand what your insurance policy actually covers, and it's important what it doesn't. Many homeowners assume their standard policy will protect them from any natural disaster, but that's a costly misconception. So let's look at some common insurance terms so that we can be more familiar with our policies. Coverage is what an insurance policy will pay for. An exclusion is what the policy does not cover. For example, flood damage. A rider or an endorsement is an add-on that modifies the policy by adding or adjusting a particular coverage. Your premium is the amount you pay for insurance. Often it's monthly or annually. The deductible is the amount you must pay out of pocket before your insurance pays. Your replacement cost is the coverage that pays the cost to replace an item with a new one of similar quality. Your actual cash value is the coverage that pays an item that's worth today after depreciation. Guaranteed replacement cost pays whatever it costs to repair or rebuild, even if it exceeds the policy limit. Liability coverage protects you financially if you are responsible for injury or damage to someone else. Loss of use helps pay for living expenses like temporary housing if your home becomes uninhabitable. Personal property coverage covers your belongings like your furniture, your electronics, or your clothing. Your flood insurance is a separate policy required because standard homeowners insurance excludes flood damage. And hazard insurance covers damage from specific perils, such as a fire or storms. These are often required by lenders. Floods and earthquakes aren't covered by standard homeowners insurance because the potential of widespread damage makes them too risky for traditional policies. So separate flood and earthquake insurance is required for full protection. To avoid costly surprises after a disaster, homeowners should review their policy carefully and consider purchasing these additional coverages, even if they live out of a high-risk zone. So let's break down the key components of a typical insurance policy so you know exactly what's covered and how each part protects you. So first, there's dwelling coverage. This is the foundation of your policy. It pays for damage to the structure of your home itself. So think walls, floor, plumbing, electrical systems. If a fire or storm damages your home, dwelling coverage helps pay the repairs or rebuilding. Next, we have other structure coverage. This protects things like detached garages, sheds, fence, or even gazebos. Usually, this covers a set amount up to 10% of your dwelling limit. So, if your home is insured for $200,000, your other structures are typically covered up to $20,000. Personal property coverage is all about your belongings. If your furniture, electronics, clothing, or other personal items are stolen or damaged by a covered event, this part of your policy helps you replace them. It's important to keep an inventory of your valuables to make the claim process smoother. Then there's liability and medical payment coverage. This protects you if someone is injured on your property and decides to sue, or if you accidentally cause damage to someone else's property. It also covers medical expenses for guests who get hurt at your home, regardless of who's at fault. Finally, there's loss of use coverage. It steps in when your home becomes uninhabitable due to a covered disaster. If you need to stay in a hotel or rent a temporary place while repairs are being made, this coverage helps pay for those additional living expenses. Understanding these components is crucial. They work together to safeguard not only your house, but your financial well-being. So take the time to review your policy, ask questions, and make sure your coverage fits your needs so that you're prepared for whenever a disaster comes your way. When it comes to insurance, one size rarely fits all. That's where optional riders and endorsements come in. They're a powerful tool that can let you customize your coverage to fit your unique needs. Let's break down what these terms mean. So, an endorsement is sometimes called a rider. It's a formal amendment to your insurance policy. It can add, remove, or modify coverage, giving you flexibility without the need to buy a whole new policy. While endorsement is more common in property and casualty insurance, like homeowners or auto, rider is often in life and health insurance. But in practice, both serve the same purpose, tailoring your protection. Why would you want an additional rider or an endorsement? So imagine you own valuable jewelry, expensive electronics, or run a small business from your home. Standard policies Standard policies often have coverage limits and exclusions for these items. By adding a rider, you can increase your coverage limit for jewelry, schedule specific items, or add protection for your home-based business equipment. Endorsements can also cover risks like water backup, mold remediation, or even earthquake damage, things that aren't included in most basic policies. Riders and endorsements aren't just about adding coverage, they're also about clarifying, restrict, or even removing coverage that you don't need. For example, you might add a waiver of premium rider to life insurance policies, which keeps your coverage active if you become disabled and can't pay your premiums. Or you may use an endorsement to exclude coverage for a specific risk, lowering your premium. The process is straightforward. You can request a rider or an endorsement at the time you buy your policy, during renewal, or even mid-year. Your insurer will assess the change, adjust your premium if needed, and issue a form of document that becomes part of your contract. The benefits are clear. You don't get better coverage. The benefits are clear. You get better coverage, more flexibility, and peace of mind knowing your policy matches your life. Riders and endorsements are usually more cost effective than buying a separate policy, and they require less underwriting. In summary, optional riders and endorsements empower you to fill the gaps, protect what matters, and adapt your insurance as your needs change. Take time to review your policy, identify any coverage gaps, and talk to your insurer about which riders and endorsements might be right for you. It's important to understand that standard home ownership insurance does not cover flood damage. This is a common misconception, and unfortunately, many homeowners only discover this after a flood event. Flood insurance provides critical financial protection by covering damages caused by rising water, whether it's from heavy rain, overflowing rivers, storm surges, or rapid snowmelt. Without separate flood insurance, families are often left to pay out of pocket for repairs, which can be devastatingly financially. which can be devastating financially. Now let's talk about where flood insurance comes from. Now let's talk about where flood insurance comes from. You actually have two main options: the National Flood Insurance Program, or NFIP, which is managed by FEMA, or private flood insurance offered by selected insurers. Having these options mean homeowners and renters can choose the coverage that best fits their risk level, property type, and budget. Flood insurance typically covers both building and personal property loss. That means structural repairs like flooring, walls, electrical systems, as well as belongings such as furniture, appliances, and other essentials. This dual coverage can make a huge difference in how quickly a household can recover after a flood. Even a few inches of water can cost thousands of dollars in damage. So having a policy that covers both home and its contents is incredibly valuable. Remember, floods can happen anywhere. In fact, a significant number of flood claims come from properties outside of high-risk flood areas. So even if you don't live near a large body of water, it's still worth evaluating your flood risk and consider coverage. The QR code on the screen takes you to the National Flood Insurance website for more information. Keep in mind that flood insurance is not just about compliance or risk mitigation. It's about resilience. It ensures that when unexpected happens, you're not facing the financial impact alone. Now let's cover two important concepts in home ownership: risk tolerance and reimbursement. First, risk tolerance is all about how much uncertainty you're comfortable with. Ask yourself, if disaster strikes, do you know what maximum financial protection you are willing to accept with some risk to save on premium? For example, higher deductibles means lower monthly costs, but you'll pay more out of pocket if you file a claim. Take a moment to consider your budget, your home's location, and your peace of mind. There's no one size fits all answer. Your risk tolerance is very personal. Now let's look at how insurance companies reimburse claims. There are two main methods: actual cash value and replacement costs. The actual cash value pays you on the current value of the damaged property, factoring depreciation. So if your 10-year-old sofa is ruined in a flood, you'll get what it's worth today, not what you paid for it. Replacement cost, on the other hand, covers the expense to buy a new item of similar kind and quality. If your roof is damaged by a fire, replacement cost coverage pays for the new roof, regardless of its age. Understanding the difference is crucial. Actual cash value policies are usually cheaper, but you may end up with less money after a loss. Replacement cost policies cost more, but they help you restore your home and belongings during to their previous condition. So as you review your policy, ask yourself, does my coverage match my risk tolerance? Am I comfortable with the reimbursement method, or do I need to adjust my policy for better protection? By making informed choices, you'll be better prepared for whatever comes your way, and you'll know exactly what to expect if you ever need to file a claim. A key part of choosing the right insurance is understanding the value of which you're protecting. Think about the factors such as your property's value, location, type, and how it's used. All of these elements play a major role in determining their insurance needs and overall risk profile. For example, a home in a coastal area, a rental property, or a house with recent upgrades will have very different coverage needs. Next, you want to identify potential threats that the property may face. So these risks can include natural disasters, theft, liability concerns, or environmental hazards. Understanding these threats helps homeowners determine the level of coverage required. This especially is important because of some risks, like flood or earthquakes, aren't covered in the standard policy like we covered earlier. Finally, once risk and property details are clear, it's time to compare policy options. This is where consulting with an insurance professional becomes extremely helpful. You should review multiple policies and ask questions. Make sure the coverage aligns with both your financial situation and your property's specific needs. The goal is not just to find a policy, but to find the right policy that offers the best protection for your circumstances. On the screen, the QR code takes you to a calculator by bankrate.com. It will let you look at how much insurance can cost you annually, as well as some additional insurance information about riders. Let's start with one of the biggest benefits of renter's insurance: protecting your personal belongings. Renter's insurance covers your possessions if they're damaged or destroyed by risks like theft, fire, vandalism, certain types of water damage, or windstorms. This includes items such as clothing, furniture, electronics, and household items. Many people are surprised to learn how much it would cost to replace everything they own at once. So this coverage protects meaningful financial protection for a relatively low monthly premium. Renter's insurance includes liability coverage, which protects you if someone gets hurt in your rental home and decides to pursue legal or medical claims. This coverage helps you pay for legal fees or medical costs if you're found responsible for the injury. It can also help if you've accidentally damaged someone else's property. So, liability protection is an important layer of financial safety that renters often overlook. Getting renters insurance is simple and usually inexpensive. You can purchase a policy through major insurance companies, local agents, or online comparison platforms that allow you to compare quotes quickly. Some landlords even require renters insurance as part of the lease agreement, but even when it isn't required, it is smart and affordable to protect yourself and your belongings. Understanding your insurance policy is essential for making informed decisions and ensuring you're fully protected. So let's walk through 3 critical sections that you should always review: your policy details, your coverage breakdown, and your deductibles and endorsements. Begin by locating the policy information and policy number. This section is usually found at the top of your declarations page. It includes your name, address, and contact information, along with your unique policy number assigned to your coverage. Having this information readily available is crucial for identification, making claims, and communicating with your insurer. If you ever need to file a claim or update your policy, referring to your policy number will streamline the process and help avoid delays. Next is the coverage breakdown. This is the heart of your policy. Here you'll find detailed lists of the types of amounts of coverage included. This section specifies when your policy protects, such as your dwelling, other structures, personal property, liability, and loss of use. Review each category carefully to understand the limits and exclusions. For example, your dwelling coverage may have a set dollar amount, while personal property coverage might be subject to sublimits for items like jewelry or electronics. Knowing these details helps you identify gaps and determine if you need additional riders or endorsements for full protection. Deductibles are the amounts that you must pay out of pocket before your insurance kicks in. Checking each coverage type for a specific deductible. These can vary. Check each coverage type for its specific deductible. These can vary for fire, flood, or wind damage. Understanding your deductible helps you plan financially and avoid surprises during a claim. Endorsements or additions and modifications to your policy, and they can expand your limits or clarify your coverage. Review the list of endorsements to know exactly what extra protections you have and the requirements that must be met. Keep track of these details and ensure that you're not caught off guard when you need to use your policy. By regularly reviewing your policy details, coverage breakdown, and deductibles and endorsements, you'll be better prepared to manage your insurance, file claims efficiently, and make adjustments as needed. Take time to read your declarations page, ask questions, and keep your policy information accessible. It's the foundation of your financial protection. Now, there's three critical steps every policyholder should take to ensure their insurance truly protects what matters most. Review policy exclusions, comparing needs to coverage, and updating their policy regularly. It's easy to assume your insurance policy covers every possible risk, but that's rarely the case. Even every policy contains exclusions, specific risks, and scenarios that are not covered. These might include flood, earthquake, mold, or certain types of personal property. Take time to read the exclusion section of your policy carefully. For example, standard homeowners policy often excludes fire, flood, and earthquake damage. If you're unsure about any exclusion, ask your insurance agent for clarification. Your insurance should reflect your actual assets and your needs, not just what's standard. Start by making a list of your valuable possessions, property features, and potential risks. Then compare the list of your current coverage breakdown. Are your jewelry, electronics, or business equipment fully protected? Do you have enough liability coverage for your lifestyle? Are there open gaps in coverage for new additions, renovations, or changes to your household? This comparison helps you identify where you may be underinsured or overinsured. If you spot a gap, consider adding riders or endorsements to fill it. Remember, insurance isn't just about meeting minimum requirements, it's about safeguarding your financial future. And finally, life doesn't stand still, and neither should your insurance. Regularly updating your policy ensures your protection and keeps a peace of mind in changes of assets, operations, or life circumstances. Review your coverage at least once a year, and especially after major life events like buying a home, getting married, starting a business, or making significant purchases. Update your insurer about renovations, new valuables, or change in occupancy. This proactive approach helps you avoid coverage gaps and ensure you're prepared for whatever comes your way. It also helps keep premiums accurate and may even qualify you for discounts or better terms. By reviewing your exclusions, comparing your needs to your coverage, and updating your policies regularly, you take control of your financial protection. These steps empower you to make informed choices, avoid costly surprises, and ensure your insurance truly supports your goal and lifestyle. Now let's look at the very first steps in the claim process, notifying your insurance provider. As soon as the incident occurs, whether it's a fire, flood, or other type of loss, you'll want to contact your insurer right away. At this point, it's also important to begin gathering documentation. Encourage Next, the insurer will ask you to complete claims forms. This part is about accuracy. Make sure every section of the form is filled out thoroughly. Attach any supporting documents you collected. These help validate your claim and strengthen your case. This step is all about setting the foundation for a smooth claims process. Once everything is submitted, your role isn't over. It's important to follow up. Stay in touch with your insurance provider to monitor the progress of your claim. If they need clarification or additional information, prompt communication can prevent delays. Regular check-ins also help resolve any questions, the issue or issues that may come up along the way. In the event of a fire emergency, your safety and quick action are paramount. First, follow the immediate evacuation procedure. Quickly leave the building using marked exits and never use elevators during a fire. Staying calm and moving swiftly ensures your personal safety. Once outside, focus on assembly and accountability. Gather at a designated assembly point and make sure everyone is accounted for. This step helps emergency personnel know who may still be inside and ensure no one is left behind. When you're safe, Contact emergency services right away. Promptly call for professional assistance so firefighters and first responders can address the situation and help anyone in need. Finally, begin insurance claim documentation. As soon as possible, document any damage by taking photos, writing detailed descriptions. Provide this information to your insurance provider to start your claim and support your recovery. By following these steps, you protect yourself and others, support emergency responders, and lay the groundwork for a smooth recovery. After a flood, it's essential to act quickly and thoroughly to support your recovery as well. Start by documenting all flood damage. Take clear, detailed photographs of every affected area and item. Write descriptions for each photo, noting the extent of the damage. This evidence will be crucial for insurance claims and disaster relief. Next, contact your insurance provider as soon as possible. Report the damage and keep all repair receipts or estimates. These documents are needed for claim processing. Prompt communication helps you speed up your claim and ensures you get the support you need. Finally, file FEMA claims promptly if you're eligible. Submit your claim with complete documentation, including photos, descriptions, and receipts. Acting quickly maximizes your chances of receiving assistance and accelerates your disaster recovery. Follow these steps, and you'll be better prepared to recover from flood damage and access the resources you need. When financial emergency strikes, whether it's due to a disaster, job loss, or unexpected expense, taking quick, informed action can make all the difference. First, contact your lender. Don't wait until you've missed a payment or the situation worsens. Reach out to your lender as soon as possible to discuss your options. Many lenders have offered solutions like payment deferral, loan restructuring, or temporary forbearance during emergencies. By communicating early, you show responsibility and may qualify for programs that help you avoid penalties, foreclosure, or damage to your credit. Second, explore relief programs. Government agencies and nonprofits provide disaster relief programs designed to support individuals and families facing hardship. These programs can offer financial assistance, housing support, and help with essential needs. Examples include FEMA disaster grants, state emergency funds, and nonprofit aid for food, utilities, or medical bills. Research what's available in your area and don't hesitate to apply. These resources exist to help you recover and rebuild. Finally, act early for stability. The sooner you take action, the more options you'll have. Document your situation, keep records of expenses and communications, and use available resources to prevent your financial hardship from escalating. Early intervention can help you maintain stability, protect your assets, and reduce stress during a difficult time. In summary, by contacting your lender, exploring relief programs, and acting quickly, you can navigate financial emergencies with greater confidence and resilience. Remember, after a disaster, credit scores can drop by nearly 30 points on average, and debt collection rates significantly affect households. So that may make recovering from a disaster feel overwhelming. But by taking the right steps early can make a significant difference in your financial and emotional recovery. First, assess and document your losses. Begin by carefully evaluating your damages to your property and your belongings. Take clear, detailed photographs of every affected area and item. Gather reports from professionals, such as contractors or inspectors, to support your documentation. Write descriptions for each photo and report, noting the extent and nature of the damage. This thorough documentation will be crucial for insurance claims and disaster relief applications, helping you prove your losses and speed up the recovery process. Next, apply for FEMA assistance. If your area has been declared a disaster zone, you may be eligible for federal aid through FEMA. Apply as soon as possible to receive immediate relief for housing, repairs, and essential needs. Be sure to submit all required documentation, including photos, reports, and receipts. The more complete your application, the faster you receive support. FEMA assistance can help cover temporary housing, repairs, and other urgent emergencies, providing a lifeline during difficult times. Finally, pursue additional aid. For long-term recovery, look beyond FEMA. The Small Business Administration, or SBA, offers a low-interest loan to help homeowners, renters, and businesses rebuild and recover. Local aid programs, nonprofits, and community organizations may also provide grants, supplies, or services to cover extra needs. Research what's available in your area and apply promptly. These resources can help you address gaps not covered by insurance or federal aid, ensuring comprehensive support on your recovery. By assessing and documenting your losses, applying for FEMA assistance, and pursuing additional aid, you'll be better prepared to navigate the recovery process and rebuild with confidence. Acting quickly and staying organized are key to maximizing the help available and getting back on your feet. So today we covered a lot of great information. We covered the 5 key areas to help better protect your home and finances, like understanding the coverage types, where we reviewed the standard insurance, what it does and what it does not cover. We looked at disaster-specific guidelines, which are practical steps during fires, floods, and financial emergencies. Third, we looked at policy review, how to read your declarations page and spot gaps in coverage and needed updates. We covered financial preparedness and strategies like emergency savings and understanding how disasters can impact your financial health. And finally, our recovery plan, the essential steps to take after a disaster to document losses, file claims, and assess emotional support. These pieces work together to help you stay informed, prepared, and resilient. Today's presentation is designed for educational purposes only and should not be construed as investment, tax, or legal advice. If you need investment, tax, or legal assistance, please consult a professional. Please reach out to us if you have any questions at 866-889-9347. You also can scan the QR code, and that will bring you to moneymanagementinternational.org. We also have learn.mmiuniversity.org for free online learning resources, recon.mmiuniversity.org for free online learning resources for military members and their families. Thank you so much for attending our presentation today, and we look forward to talking to you again.